Hello traders, this is Frank Paul from Forex Mentor speaking with you on Saturday, January 12th, 2013, or possibly on Friday if you happen to be a follower on our Twitter feed. You can get the link here early, but in any event, I just wanted to welcome you to this latest Saturday free video presentation. I'd like to talk a little bit about a service we call FXM Trend Trader. Just quickly in terms of how the methodology works. There's a lot to it, of course, and I'm condensing it down into a very quick snapshot, but the crux of it is that we look for a 3-chart MACD histogram slope reading, obviously all in the same direction, whether sloping up or down. And for the most part, we focus on the daily 4-hour, 60-minute time frames, but the latest iteration of our EA tool also allows for a scalping option, which looks for that reading across the 4-hour, 60-minute, and 15-minute charts instead. We have a real-time market screening tool called the Momentum Matrix, which I'll show you briefly, which draws your attention to pairs that satisfy this particular requirement of a setup. We never trade just on the signals. That would be a really big mistake. It's important to corroborate the indicator signals with some basic analysis, technical analysis, including market flow, market structure, support, resistance, etc. We provide a pretty thorough overview of those topics in the foundation course for FXM Trend Trader. Once we have all of the pieces of the puzzle falling into place, we drill down to the combination of the 5-minute and 1-minute charts. We're looking for a particular type of validation signal on the 5-minute chart, in which case a crossover on the 1-minute chart tells us to possibly go ahead and take the trade. And we have very detailed trade execution and trade management rules and guidelines, again explained in our foundation course. You can also use our EA tool if you're able to see a setup possibly several hours ahead of time but not able to kind of stay with it in real time, looking at your charts on your workstation. Maybe you've got other things to do, just not available when the setup materializes. That's where our EA tool comes in. It's a semi-automated EA tool, which means that once you tell it to look for a trade and in which direction, it will go to work looking to satisfy all of the requirements that we specify here. I'd like to just show you a quick chart illustration of how the methodology works. This focusing on the Aussie-Yen cross pair with a long bias Thursday this week, January 10th. An entry price on the 1-minute chart at 3:21 a.m. GMT precisely. Entry price 92.87. Initial protective stop 92.67 for a risk of 20 pips. Although I have to be candid here and acknowledge that I'm finding that on the margin, as nice as it is to risk no more than 20 pips all in, occasionally that's a little bit too tight for some of the wider ranging pairs like pound kiwi, euro kiwi, etc. So presently we're toying with the possibility of a refinement whereby we use a slightly wider stop on those wider ranging pairs. But in this particular case, that wasn't an issue. Aussie yen is a strong pair, but it's not in the same category as pound kiwi, euro kiwi. So 20 pips work just fine here. Our methodology requires that we use a 4-lot scaling out technique. That doesn't mean you have to quadruple the size of your normal position sizing. It's quite the opposite. You take your prudent financial risk based on your actual account equity and no more than 1.5% account risk, and divide that as best you can into 4 separate size lots. You don't have to do that. We provide the option with our EA tool, for example, where you can focus on just one of these exit strategies or some combination thereof. But we're basing our approach on the idea that you cannot know for sure how far price will go in your favor before turning against you in some way. We never know whether a trade attempt will culminate in a successful position trade. Maybe price will go in our favor 50 pips and then tank against it, even though the high-level trend remains intact. So those are the kinds of gyrations we have to work our way through, and the best way that we know of is to scale out of the trade. So we divide that into 4 equal-sized lots reflecting the 4 major accepted trading strategies or styles. We look for profit on 30 pips, which we call our scalp leg or P1, and then we look for a day trade limit exit, which is derived in an uptrend by adding 5-day ADR to the actual low for the day. Then a swing trade exit, which is 2 times ADR, and then we leave the final lot open with stop trail to break even. By the way, stops are trailed to break even on all 3 of the latter legs of the trade once the scalp leg profit has been attained. Okay, so once we've got 30 pips, the other 3 legs are risk-free. And we use a specific type of trade exit strategy for our position trades, which again is explained in our foundation course. So I'm just going to quickly walk you through what the charts look like for this particular setup. Before we do that, I'll just give you a quick overview of our membership area, let you know what resources included, and I think I'll bring up our chart extract from Wednesday of this week, which alerted our members to the pending long opportunity. So let's do that quickly and we'll come back into chart mode. Here is the members homepage. I can only show you part of it just because of screen resolution issues, and it's organized into tabs, which includes a learning center where you have all 10 modules of our foundation course, which explains the methodology, and our EA tool that you can use optionally. Our real-time momentum matrix tool, again, I can only show you parts of it, I'm afraid. Just to record this, I have to sort of zoom out to a really high chart resolution or screen resolution. But basically, what this thing does is update specific signals for a total of 25 different currency pairs, which you can see listed to the left. It gives you the 5-day ADR figure, which is a feature we just recently added. This is nominal ADR, it's not pip cost adjusted, just to keep things simple. And then we have simple up-down readings based on the MACD histogram slope across the daily 4-hour, 60-minute charts. If we get readings lining up right across the board, which as I record this right now, we're not getting on Friday afternoon, but if we do, we get signals on the execution time frames, which would suggest whether an entry signal based strictly on the indicators is presented. Now, of course, you don't act just on that. You have to consider the technical picture, paying attention to market flow, support, resistance, etc., but at least it draws your attention possibly ahead of time to where a trade setup might be materializing, and then we've got a signal log off to the right-hand side. Again, these aren't actual trades. These are just signals generated. Some of them are trades, most of them are not. I'll just be very candid about that right now. I wouldn't want you to go through this list and say, okay, this thing said go long on this pair at this time. That's not actually what it's saying, even though it's worded that way. Entry long just means that we've got the combination of indicator signals, which would tend to suggest a long entry if the technical picture favors it based on market flow analysis, etc. Okay, so that's the real-time momentum matrix tool. We have a daily recaps area, which includes both a daily trade recap video, which you can access for any day of the month where they're posted by clicking on this date picker calendar icon, and then we have also a market flow PDF report that looks like this, and we've got chart extracts and annotations for all 12 forex markets that we track in this. Then we have a tab for our MT4 EA tool and additional resources, which includes a typewritten trading system cheat sheet, trading rule summary, some indicators that you can download, a performance tracking database, which is prepared by one of our members, George Pitcher. He's scored net 2,120 pips on a 4-lot basis since we launched in November. And also a weekly market moving news schedule that we've prepared for you, which saves you the tedium of having to use other online resources and kind of sift your way through the myriad listings. We only list potentially market moving news. And quite honestly, my attitude towards market moving news is there's really only 3 or 4 reports, right? It's central bank interest rate announcements, central bank press conferences or economic outlooks, and employment reports. I don't see GDP or retail sales or any of those things tending to adversely affect the market, at least when you have a strong trend in progress. But anyway, you can access all that information there. So that's a quick look at our membership area. And what I'm going to do now is pull up the PDF report from our daily market flow analysis for Wednesday this past week, looking at the Aussie yen pair. Okay, here's the page from our 14-page report, again posted for members on Wednesday by 12 p.m. noon Pacific time, which is 3 p.m. Eastern Standard Time in the United States and Eastern Canada, Eastern North America, I should say. and so on and so forth. So this is what it looked like for us on Wednesday. Aussie yen 4-hour chart. The bias was conditionally bullish. Actually, in retrospect, I should have used different terminology there. I should have said pending long. But in any event, as per this annotation, we had a swing point A, the last corrective low of significance at 88.78, swing point B, an interim high at 92.84. Then we labeled the corrective bottom on the 38 Fibonacci and suggested the next move was up to fresh highs above 92.84, and one idea for that would be, for example, the 27% Fibonacci extension at 93.94. Anyway, the annotation here, I'll read it for you, says the corrective bottom we were looking for yesterday has materialized without the corroboration of a bullish slope reading on the daily chart, but that appears to be imminent on today's close. And that did happen, and that did enable a long trade into Thursday. Watch for long setups into Thursday, targeting fresh highs above 92.84. Okay, so we've already addressed all of that. That's what we're looking for. Clearly a bullish bias. If you're going to do anything with this information, you're going to be looking for a long trade. We do not advocate counter trend scalping unless it's within the context of a really substantial looking retracement, which can be reasonably expected to cover a distance of 100 pips or more. Anyway, there we have it. So now what I'd like to do is show you, first let me get rid of this crosshairs cursor. It's a little bit irritating to look at. There we go. And now let me get my cursor mode. Okay, I think I'm all set. Here we go. So there we go. The daily chart is giving us a 2-bar bullish MACD histogram reading like so. That is 1 bar followed by a higher bar as of the open for Thursday, January 10th, 2013. In the context of which you can see clearly bullish market flow. Heikin-Ashi bars with shaved bottoms aplenty. I really love this candle format because it has a built-in sort of momentum indicator there. That's what it looked like on the daily chart. On the 4-hour chart, we already had back-to-back positive slope on the 2-bar histograms going all the way back to 4 a.m. GMT on the 9th. So that's looking good right there. Again, a nice Heikin-Ashi progression of up closes. Fast forward into today, and we've got kind of a pennant pattern unfolding, but that's today's news. That wasn't the news on Wednesday. So here again, we've got a 2-bar bullish slope reading like so into 3 a.m. GMT January 10th. So what that has me do is pulling out my 1-minute chart. Well, my 1-minute and 5-minute charts. I'm going to spare you the details on the 5-minute, but basically what we're looking for here is a low-level corrective reading which is reflected in this simplified MACD crossing down and through the zero line. Simplified in the sense that I've stripped away the signal line and changed the settings to a particular combination. It reflects the difference between the 10 and 20 period exponential moving averages we've got plotted here. So that's the crossover event we're looking for. Happened right there, 3:21 a.m. GMT. So if several hours earlier you had flipped on the EA tool with a bullish bias, it would be actively looking for this trade right now. And so we're in long here at 3:21 a.m. GMT. Our first target was right up here at 93.17. Which wasn't achieved until many hours later, and that's just, that's just the way it goes sometimes. Price might go sideways on you for several hours, which makes it really tedious to babysit the trade, but that's where our EA tool comes in effectively, or just simply using a limit exit, of course, so you can do this manually. There's no specific reason why you have to use an EA tool if you're not comfortable with that. But anyway, there's our first limit exit, and then we stack up subsequent targets. I don't know if I've got any drawn here. No, I don't. But I'll give you a hint. For example, if we pull up the daily chart, I've got a projected high indicator here on the bottom, which tells me to look for 93.34 as our day trade target. That was hit. You can see from the cursor details we actually hit a high of 94.53 for this particular day, blasting through the day trade target and achieving the swing trade target in the same day. This is just one more illustration of how we can't be sure just how far price is going to go. I had no specific reason ahead of time to know that price was going to achieve a huge up move on this particular day. I mean, that's nice, but I didn't know that price was going to specifically blast through the projected high, which it did, which is why we have subsequent targets. And so now the position trade leg is the only one open, and we'll just follow this through using a 3-bar trailing stop technique, which was shared with us by a Forex Mentor member by the name of Dick Thompson, which we really appreciate. And so it's a profitable trade with now no risk whatsoever. Okay, so just a quick little recap on the Aussie yen trade for Wednesday, Thursday of this week. That brings us to the end of today's presentation. I hope you've enjoyed it, maybe stimulated some fresh thinking for your trading. If you'd like to learn more about FXM Trend Trader, there's the URL, forexmentor.com/FXM Trend Trader, all one word. You can also follow us on Twitter. There's our handle. Similarly, it's at FXM Trend Trader or twitter.com/FXM Trend Trader. We tweet every day, Monday to Friday, on all 12 currency pairs that are included in our daily market flow report. Of course, we provide coverage of another 13 pairs in our Momentum Matrix tool, which in turn I acknowledge means that you have to do that technical analysis yourself for those pairs. But hopefully the information we provide in our market flow report gives you some good bias and some good food for thought in terms of where some of the other pairs are headed. Barring all that, if you have additional questions, comments, feedback, what have you, feel free to email me anytime via frank@forexmentor.com. Thanks for joining us today. Enjoy the rest of your weekend, and I hope that we can talk to you again soon. Bye for now.